morning. How's everybody doing? You made it. After everybody have a good time last night? Yeah, it was awesome. So I'm just take a couple minutes here, a couple seconds to get my amazing team, your regional managers to the stage. You guys know them very well. They've helped us do everything we did in 2019, and we are so excited for 2020. Without them, we couldn't make this day possible either. I want to thank you all so much for being here. We don't take for granted that you're leaving your family and your businesses for 2 days to spend with us. So our intentions are to have it be packed full of information and help in your businesses so that you can go back and say you didn't waste your time. And you can also say you were almost in a tornado, because I don't know if you guys realize it or not, but there were tornadoes touching down everywhere last night here. It was because VanDyk flying. I mean, we don't have tornadoes this month. I mean, that was totally crazy. A couple housekeeping issues before we get started is in the vendor hall, this wouldn't be possible if we didn't have our vendors. So please take your time to stop and talk to each one of them. But what's really exciting for us this year is you have your very own vendors here. You have your marketing team, you have your lending team, secondaries out there. Kyle is out there with still camera for photos and also videos. So definitely take advantage of that. Take your time to get to know the staff and the people that are here for you, that you talk to every day on the phone, that you don't necessarily know face to face. So I don't know about you guys, but I am so excited. We're coming off of a third and fourth quarter that was great and a January that was amazing. And that's all because of you guys. So we're actually having fun, right? This is a fun time. I feel the excitement, I feel the energy, and I know that you guys are gonna take a lot out of this. So without further ado, I have the tremendous opportunity, or we do, to introduce to you the man that makes this all possible for us. If it wasn't for Tom VanDyk, none of us would be here. He's paved the way for our success and allowed us to create the systems and models that help each one of us in our businesses. I'm very proud and thankful to introduce to you Mr. Tom VanDyk.
Thank you. Thanks, guys. Appreciate it. Thank you. Laura Lynn, that was great. Thank you. All right.
Thanks.
Great. Super. All right. Brian, my man.
Thank you.
All right. Oh, wow. You know, when I say this every year, but okay, yeah. You're embarrassing me. Thank you very much. You know, I take a lot of credit where it's probably not due, but anyway, we did have a great year, and this January was a super January as well. And yeah, when we started VanDyk Mortgage, I never thought we would have it like this. So this is pretty exciting for me. So, but I'm just kind of reflecting back on last year and give you right at the tail end. I'll give you a little bit about where we think we're going. But just want to thank the staff and Michelle and Kim and all the guys here. Wow, look at that! they've got quite the operation going there. So a lot of work to put this together. And other than the weather, I think it's coming out perfect. And I've talked to the Hilton staff here, and they said they're going to fix the weather for us here pretty soon. So anyway, so I'm going to give you a little just state of the company. How are we? What we're doing? How we reflected over last year. And then Laura Lynn, and we've got a great agenda, a couple of great speakers for you, and the whole regional team is here to help you through. And I'm pretty excited about the regional team because if you guys need anything, I have not heard anybody bitch about, hey, I didn't get this, I didn't get that. And I know they do, they work their butts off. And I tell people, they're kind of like ducks. Nice and smooth on top, but going like hell underneath, So anyway, enough on that. We've got a new name. You all know Caitlin, my daughter, and Ryan is my son. I just wanted to give you a little bit on them. Caitlin started with us in 2011, so she's been with the company for about 8 years now. She started as a scanner. I mean, all she would do all day is stand at the scanner, which is like a big copy machine, and all day long for 8 hours. She did that for about a month, 2 months.
I decided mortgage business wasn't for me.
Yeah, then she quit and she went into social work for 3 years. So I guess that's not the way to start people out as a scanner. But then she came back and she was in compliance for 2 years and a junior underwriter. And then she started in the Sarasota branch with the Burchett team, and she closed $14 million last year. But, you know, I got to say, where's Michael Burchett? Stand up, Michael. I don't know. I hear, Michael, I hear it all every day. And thank you for all your efforts, because I know it's a Herculean effort, but yeah. But anyway, there's a new name on there, Caitlin VanDyk Rapasardi, and there's a new name and a new addition to our family in Nick Rapasardi. You stand up, Nick, Caitlin's new husband. So just a little excerpt. That was a pretty proud day for me. And so that's an Italian name. And then now Ryan just got engaged to Candace, okay? So I got a Rapasardi already in the family. And then now Monticelli is her last name. So now I got 2 Italians going on. Oh, my. You know, and I'm half Dutch and half Polish, so I don't know how this is all going to mix. But Candace, would you stand up in the back there? There's Candace is Ryan's new fiance. So we got about 9-10 months before that all happens. So those couple things are big events in my life. So I just wanted to share that with everybody. Anyway, yeah, last year, almost 1.2 billion. Anytime we can crack $1 billion, I'm just thrilled, okay? So, and we've done that for the last 5 years. We did 5,441 units, so that's I'm pretty proud of that. In our gross revenues, we went up from 53 to 60 million, which is a 13% in gross revenues. So, you know, we rerun gross revenues about 5 million a month. So, you know, the senior management team in Justin and John Barnes, there's a lot of money flowing through there. And, you know, we're closing on average 110 million a month. So a lot of activity going on, and thanks to you guys for bringing it all in. Caitlin, this is Caitlin's slide. Yeah.
I get to do some slides.
Yeah, you do.
I'm not mic'd.
Okay, go ahead. I gave Caitlin 2 slides to do. I said, Caitlin, do these 2 slides for me. And
it's on?
There you
Okay.
go.
All right,
Good.
good. Everyone can hear me. So, Dad, thank you for that introduction. You know, yesterday I've got my dad emailing me saying, hey, can you send Kim your wedding video? So you never know what's going to happen. But when you have the mic, that is true. You just never know what he's going to say. So, but anyway, we wanted to go ahead and recognize these are company awards from 2018. The 2019 are not out yet. However, we are expecting to get the same 3 awards. We had the Mortgage Executive 50 Best Companies to Work For, also a top 100 mortgage lender in the country, and the Scotsman Guide Top 100 Mortgage Lenders. And then we have, that was all for 2018. And then 4 of our originators were in the top 1%, which is pretty cool. Brian Eddy, Justin Kelly, Diane Manriquez, and Sean Miller. So congratulations to you guys.
Yeah. And you know, you need to realize these are the people that submitted their information to the Mortgage Executive magazine. So it's not everybody in the country, but it's a good slug of them. So we're pretty proud of that. Just some real quick numbers. On the right-hand side, we had a 6% increase in production, which was 312 loans. 17% in volume, 172 million. Our average loan size went up $20,000, which was interesting. If you look, shoot, I know the back doesn't work well. we have 217, and last year, where's our average loan balance? It was 197. So I thought that was real interesting. That went up 10%. So that made the volume a little easier too, because the average units. Now we have opened some, like in California, and now we're in New Jersey and New York. I'm going to expect that to go up probably another 15-20% this year, just because we're in those bigger states, So you got Keith Riley and Mario and all those guys down there in the 130, 140 range, just pumping it out. So we appreciate that. The product mix stayed the same, which is kind of interesting to me. You see 64% of our business was conventional, 36% was government this year. Last year was exactly the same. And I questioned Justin on that, and I said, are you sure? Yeah, so I thought that was very interesting. Purchase versus refi. We did 80% of our business was purchase last year, 20% refi. And the volume was 77-23. Compared to last year, 90% purchase versus 80 and 10% refi. So we did 10% more refi business in 2019 than we did 18. This is an interesting one. 4,400 loans were 30-year fixed. 82% of our business was 30-year fixed. I just thought that was very interesting. 7% of the business was bond. 3.4 was 15-year. 22 units. We did 22 units of jumbo. So if you haven't had a cap discussion, okay, how many know when I say cap, what am I talking about? Okay, good slug of them. But we only did 22 units total for the company. And I know we added California, and they have only been with us for a year or so. And they had, about a third of those, would you say? So overall, we're not doing much jumbo. I think that's because of how we cap. 20 units were adjustable rate, so we're really not in the adjustable rate market. 15 reverse mortgages. Our largest loan was almost $2.3 million. Eddie Bilecki did that out in San Diego. Our smallest was by Katrina Lockhart in Michigan of $30,100. And 86% of our business was 15 and 30 year. So it's a lot of work to do for a $30,000 loan, isn't it? But I think, what is it, John? Legally, we have to do, we could go down to $5,000. Is that, so I don't know how you say no to somebody when they want, $5,000 loan. Okay, this is a slide Laura Lynn made sure, and she kind of took my thunder away already saying January. But look at this number for January. We were up in 2020, which is last month, versus last year, 2019, we were up 144 units or 65%. That makes a huge difference. So we're getting off to a very good start. And Laura Lynn has told me and Brian that our pre-app count of recent is as high as it's ever been. Huh?
We did more pre-approvals in the month of January than we did in any month in 2019.
Okay, I hope you all heard that. More pre-approvals in January than any other month in 2019. So that's a real good sign. Real good sign. Okay, this is your senior management team. Jeannie, you all know Jeannie, Laura Lynn, John Barnes, Justin Mead. Everybody know Justin? Okay, I mean, Caitlin and I was down to Caitlin's. She lives in Sarasota. I was at her house about a week ago, and her email went out. And bark, man, the email goes out for a minute or two, and she's going crazy. And as I tell Justin, everything's fine as long as everything's working, Justin. So. Lindsay, underwriting manager, James Beebe, our legal, Patty, Ryan, Rich, Tom Smith. Tom couldn't make it. Lindsay and Tom couldn't make it today. And then Justin. So we're, huh? Yeah, why don't you all come up and we'll give them if you give them a little hand.
You have good heels on, Jeannie.
And this is our org chart. This is my coffee, isn't it? Close enough. Could you get me another coffee? This is our org chart. This one kind of blows my mind too, and we started with VanDyk Mortgage. I think we've got, what, 1, 2, 3, 4, 5, 6, 7, 8, 9 different departments. They all are now, of course, reporting to Jeannie, and our new lending manager, operations manager is Rich. And that's a full-time job taking care of all that. Okay, and Jeannie's one, she loves to get up and speak to everybody, and she needs to know everybody's her friend, and she's the boss, and she's going to give us 2 minutes on how she and her staff are going to help you meet your goals for 2020.
Good morning. I have to say first, one of my favorite parts of this event is events like last night where I get to meet each one of you individually and say hi. So that was great. My job as the Chief Operating Officer is to support you, and I do that by really supporting all these people up here. So I'm going to really let them tell you what's going on this year. My focus, of course, this year, besides Empower, is we have a couple new things. We're going to update the appraisal management software. So it's going to give you more visibility, a mobile app where you can communicate through a mobile app. And it'll push documents to Encompass versus having to pull them. So it should save you a lot of time in that event. And the other big thing we're working on is our new Ask VanDyk portal, which is going to have all the agency regs, all our VanDyk regs, lending announcements, resources for the lending department, all in one portal. It's easy, it's friendly. And we brought Taryn Chattel down. She's out in the lobby to show you that portal, sign up, get access to it. And we're very excited about that.
Good, great, thank you. Okay, just a little more tidbits, some industry news. The MBA Mortgage Bankers Association indicates that the business was up 23% in 2019, and we were up as a company 17%. Industry-wide, 70% increase in refi, and we were up 117%. So we went from, if you remember the other slide, we went from 10% refi to 20% refi, which was good. Now the forecast for refinancing, okay, is just kind of a little gloomy. They believe next year it's going to drop 7%, the year after 8%, and then 2%. Okay, although the overall originations for refi is expected to go down, the overall originations for business is expected to go up. This is a forecast from the MBA, and then this line right here is the purchases, and you can see this is 18, 19. You see how it's going up a little bit each year, okay, which is a 3% increase from 19 to 22. But the refi is expected over the next 3 years to drop 46%. So what does that kind of tell us? I think that maybe this year is going to be a decent year for refi yet, and then it's going to keep dropping a little bit. So you do want to concentrate on your purchases. You know, concentrate on your realtors and you know, your referral sources, because we're going to see a drop in that refi business, at least according to the MBA. This is kind of interesting. Our highest paid loan originator for 2019 made a little over $850,000. I thought that was pretty good. Our average warehousing was 27 days. For you that don't know what warehousing is, when we close the loan, we actually borrow the money from our warehouse bank, and then it sits on a line. It's like a big credit card, okay? It sits on our warehouse line until we get it sold to an investor. And those investors are typically Fannie Mae, Freddie Mac, Ginnie Mae, which we call agency investors, or we'll send it to, you know, an outside investor like Wells Fargo, Penny Mac, or Bank of America, or whoever is bidding on those loans at that time. But we turn that about every 27 days, which is good. Our average FICO score, this was interesting to me, 717. That blew my mind. I mean, I live in a world of 550. Where's Brad King? Yeah, we just got one approved. What was that, 540? 543? I said, what? Now, to be on my defense, it was a 60% LTV on a $500,000 loan. So they had 200 grand down. I haven't seen the whole file yet, but we said we'd go through with it. Okay. Okay, the fastest closing was 10 days. So we can do it in, legally we have to wait 7 days, so we could do it faster, but our fastest one. Okay, in 2019, our early EPD, early payment defaults, and early payoffs. We now have a clawback. If you don't know what early payoff is, you need to know that because that affects you because we come back and take your commissions back. What happens is the loan pays off within 6 months and we have to pay back all the premium, everything, plus we get hit typically with a $2,000 fee from the investor. So when you see a loan that you know, like the people got a free and clear house and you believe that they're gonna be paying it off as soon as that house sells, you got to talk to us because you're going to do the loan for nothing because we now come back and take that commission back, which I think is fair. It really is not a sale, okay? In our repurchase losses, okay, we had 6 repurchases. We had 25 EPDs and 44 EPOs. That was a total of $700,000, okay, that we had to, well, you don't do $1.2 billion and not have some loan losses, okay? So we paid out $700,000, which is about 6 basis points based on our volume. So when we do our budgeting, we will budget 6 to 7 basis points for loan loss. And that's one of the big reasons we're looking at our new software, Black Knight, because we believe that that's going to help shrink all this. I mean, some of this is just because we missed counting days. You know, we're doing a IRLA, a VA, and we missed the days. We had to be 90 days or 180 days before we could refi, and we missed it by 1 day just because we're counting wrong. Okay, we're gonna let computers do that kind of manual stuff that Encompass, I don't think, does as good a job as they could. So I'm pretty excited about the new software. So anyway, I wanna get rid of that or minimize that $700,000 loss as best we can. And that's where I'm going to plug in Patty Lacey. Patty, you don't talk to Patty unless there's problems. Patty comes in my office and says, Tom, you got another indemnification to sign. And what that means is that FHA or VA has insured the loan, but if the loan goes bad, they're going to come back and make us pay. So I hate signing those, okay? But she's the one that delivers that news. She's head of our quality control and our chief risk officer, and she's going to tell us a little bit how we're going to minimize those EPOs and those early payment defaults and how she's going to help you reach your goals as well. Patty?
Good morning. So I'll start off by saying it was great to see everybody last night, always. Although there were 10 people that I counted already that said it's great to see you, but I don't want to have to talk to you until next year again. We're like, we love to see you, but we don't really want to talk to you. So I get it, it's all right. But what the Quality Control Department is continuing to do is we're looking at files every single day. As you all well know, we do pre-funding reviews. To date, or in 2019, we did 855 pre-funding reviews. And what that does is it gives us an opportunity to look at trends and defects that we're seeing and to minimize what could possibly be 12 repurchases or 18 repurchases. So as we do that, we're also looking at the investors are requesting files from us on a daily basis, all of the agencies. Last year we had a total of 1,986 files that were audited in one capacity or another. So of the number of loans that we closed overall, that's a pretty significant number. And overall, our target defect rate ranges in about the 1% range. So we're still looking at very good numbers and continuing to decrease that information and errors that we're seeing. The biggest thing that we're still seeing, and Fannie Mae's concerns, is undisclosed debt. So we're really considering and looking at those bank statements and really what those borrowers are doing or what they're not telling us. So it's a continual deep dive and a little bit of detective work with my team as they're always looking and asking the questions that nobody wants us to ask. But with that, it helps us minimize that overall loss, and it keeps me out of Tom's office.
That's good. That's good. Patty, you know I love you, but I just don't like it when you have that look on your face.
I know. And now you're in Florida, so it makes it, I have to keep coming down here to say, Tom, and
I know. Well, Justin protects me. He always says, Tom, you didn't make the kind of money you thought you made, John Barnes, come on, what the hell's going on in second? No.
But, QC is not, we're not looking to turn loans down or discourage people. It's just one of those matter-of-fact things that we need to do to keep everyone protected within the company, and, that we continue to have a well-manufactured product for the secondary market.
Thank you.
Yep.
Thank you. Okay. John Barnes works with Tom Smith, who manages our servicing portfolio, and he wasn't able to make it. He's having an operation today. But anyway, we service loans, and for those of you that aren't aware, we close a loan, and many of them we sell, and many of them we will retain the servicing. And we're typically paid 25 basis points to do that. Our current servicing portfolio is $278 million. It's about 1,700 loans. 90% of that portfolio is Fannie Mae, about 1,500 units. This is kind of interesting. Average note rate is 4.4%. About 4% of the portfolio is Freddie Mac, only 49 loans, and the average note rate's a little bit higher, okay? And 6% is Ginnie Mae, 156 loans. So we just started doing the Ginnie Mae securities, and John Barnes tells me Ginnie Mae does just your FHAs and VAs. And then, of course, your LP and DU, you can run both, and then we can sell it to both either way if we retain the servicing. So our lowest note rate in the portfolio is 2.75. It's a 15-year loan, and the highest is 5.875. So 5.875 is kind of out of the market right now. And just a reminder, the slide's to remind you, if you've closed the loan, make sure you check the rates of your customers a year ago, and can you refi them? It's a good time to do it. Make sure you're not in that recapture period, though. You got to be at least 6-7 months. Okay. Our warehouse capacity, we use 3 warehouse banks. Okay, we've got Comerica Bank, People's United, and Sterling Bank out of New York. People's is out of New Jersey, and we actually their office is in Louisville, where we do the warehousing. But our total capacity, we've got $50 million with People's and Comerica, and $30 million. I think that's a mistake. It's $40 million, isn't it?
2019, 40.
Oh, okay. I'm sorry. It went up 40. Right. So our warehouse capacity went up 7.7%. We picked up another $10 million in warehousing. As I said before, our average turn time is 27 days. And Peoples was in the office at our senior management meeting. Where's John? Okay. And they pretty much offered us, another $50 million yesterday, which I thought was kind of interesting. And I looked at Laurel Lynn and said, hey, guys, I can get the money to close the loans, okay? I just need a little more production. So we're ready to take on that production. We can turn that much faster than the 27 days if we needed to. Typically, we can do it in 2 weeks. So I could probably turn that twice a month if I had to. But we have plenty of capacity to handle any extra volume you got. This chart just shows in the red, which is this year, the loans we funded, and you can see right in July, started exceeding, and for the rest of the balance of 2019, we funded more loans than we brokered. So, or excuse me, it's just the number of bank loans that we did. One of Justin's charts. Okay, a little bit on that. John Barnes is going to talk about secondary and what's the difference between brokering and funding. And I just asked this morning, how many loans did we broker overall versus funded? And we're around, 2 to 3%?
Yeah, last year I think was right around 2%. This year's right around 2%. The vast majority of what we do through our bank channel. I think last year was only around 80 brokered loans that we had. So in terms of that, it's relatively small in terms of the stuff that we do broker, but as you've seen, we've expanded a lot in the past year in terms of the broker outlets that we do have. We kind of realized that non-QM market, it's there, we need to tap into it. You guys have obviously given us the feedback of who we need to pursue and the products that we need to look at, so keep bringing those on. If there's something that we don't offer, we're open to taking a look at it. Some of the initiatives we're kind of looking at this year, Brad Chattel is out there. We're actually going to be making a pricing engine switch this year with the transition over to Black Knight. They also own Compass Analytics, and the integration between those two systems is flawless, basically, compared to where we were with OB. Very much valued the relationship we had with Optimal Blue, but obviously moving forward, we want the best integration, least amount of work for you guys. So definitely, if you get a chance, talk to Brad. He can show you. You've got the ability to lock mobile. You've got options, and we're going to continue to work this year. Product expansion, continue to offer competitive rates. We got some cool products in store for you guys. And on the servicing side, since Tom Smith wasn't here, he sent me with a couple of notes. The main underlying theme, we're going to continue to be there to support you guys. If you have any issues, reach out to them. They're a very proactive group, so any borrower who's having issues, touch base with them. Let them help you.
Okay, this is an interesting slide. We went from 360 to 386 employees, so we increased 7% from last year to this year. Our average loan per employee per year. So if I take the number of loans we closed divided by our number of employees, it's 14. That just blows me away. This is if we took every employee, all you have to do is 14 loans a year, okay? But you have to originate it, you have to underwrite it, you have to ship it, you have to deliver it, you got to warehouse it, you got to do the QC, you got to do everything we all do, okay? Which is kind of an interesting number. Comes out to 1.2 loans per month, but you got the whole month. I mean, okay. Last year, this is very interesting, and this is when I argued with Justin a little bit. We're 14.1 and 14.2. So we actually almost exactly the same at 1.2 loans per month per employee. Now, industry average is 1.7, and we're at 1.2. So we're a little less inefficient than the average for the industry. And I think we can make just by some simple cuts, and we're going to make a strive this year to make that happen. So, and these are numbers I already gave you that we had a 6% increase on the overall production. This one I'm kind of proud of. 51% of our employees have been with the company for 5 years or more. Okay, which I think that's pretty cool. We got 138 5+ years. We've got 10 people that have been with, or 48 people have been with us 10+ years. 7, 15, and 2 have been 20. Now I'm going to tell you something. We're going to show a slide. The next slide is going to be where everybody's categorized. We beat up, we scoured, we make sure if there's any mistakes, I'm giving a free $250 certificate to Ruth Chris if we've made a mistake on this, okay? I don't want to, every time I do something like this, there's always one person that I missed or one person that I didn't show the right year or something. Now, with the exception of Anthony Mosley that we've already checked and that we couldn't change it, that I know he's been 14 years rather than 11 on here. So, Caitlin, can you help me out? What I'd first like to do, though, before you get going, in the room, now we don't have everybody here, but if you've been with us 5 years or more, could you just stand up real quick? Anthony, there he is. Okay, yeah, thank you. That is very cool, very cool. Okay, go ahead and sit down. All right, Caitlin's gonna kind of just read off the people, and if you're here and she reads your name, just stand up, okay?
All right, sounds good. So we'll hold our applause till the end. So 10 years, we've got Connie Kern, Bill Veering, and if you could stand up if you're here as your name gets called, Sean Bloom, Sean Landez, Charlie Kemp, Chris Kenworthy, Stephen Katz, Jessica Soros, Mike Rhodes, Cindy VanDyk, Daniel Newman, Joe White, Angela Pacey, Kelly McLaughlin, Rick Nivison, Chris Van Est. And then if you could stay standing real quick, 11 years, we have Patty Adamson, Lindsay Coonley, Tim Hart, Tim Van Dyke, Keith Riley, Tracy Lucas, Colette Peters, Kevin Hildebrandt, and Rebecca Hildebrandt. 12 years, Lisa Sanford, Amber Workman, Shannon Reichelderfer. Did I get it right? Did I get it right? I'm practicing. Stacy Detling, David Viax, Rob Young, Brian Scar, and Diane Manriquez. 13 years, we have Austin Bell, Mandy Tenharmsel, Mario Flores, John Barnes, Justin McDowell, and James Beebe.
Thank you.
And 14
my
years,
man.
we've got Joe Dischinger, Anthony Mosley.
All right, man. Thank you, sir.
15 years, Tanya Herrera, Patty
There he is.
Lacey, Charlie Sundstrom.
Hey, you.
Anthony's 16? Anthony, are you 16 years? 15, okay.
I told you we had to
totally
check
messed
that one.
Anthony up. Okay.
We had to check that one.
Okay,
Thank
sorry
you,
about
sir.
that. So 16
man.
years, we've got Don Ivers. 17 years, Cindy Doyle. And then the 20-plus year category, we have Jeannie Nivison,
Thank you.
Tom Van Dyke, and one person that's not technically on the payroll, but
She's on the payroll. She, you stole my thunder there,
Oh, okay.
Caitlin,
All
but that's all right. Go ahead.
No, go ahead.
You stole
Go
my
ahead.
thunder and a
Do you
couple
know who I'm
brownie
gonna say?
points. Go ahead.
And the brownie points. But if Sue Van Dyke, if you could stand up as well, and then everyone,
Yes.
round of applause.
She actually knows the mortgage business a lot better than you think she does. Because she's a good sounding board and a good listener to bitching. Anyway, I'm pretty proud of this chart, guys, and thank you very much. I mean, for the average turnover, Jeannie, what are we saying the average turnover in the industry is? 35-ish, 40%? 40% is the average turnover in our industry, and I said, man, that's high. And so for this year, we're looking to see how can we, enhance our benefits and reduce that turnover. A lot of it is with people coming 1, 2, and 3 years. But I'm pretty proud of the fact that almost half our staff's been with us 5 years or more, and really proud of this group. And there's a lot of people that were with us 5 years, who I know are 8, 9 years, getting very close to that 10-year mark. So and that's all part of your total career. So thank you. We did drop to 25. Yeah, that's huge. That's huge. Because it's expensive to hire people, and as you all know, you hire a new person, you train them for 6 months, 9 months, and then they leave, and you got to start all over again. So, if we all this year concentrate on good hires, it really is a cost savings. Okay, that being said, we're going to talk a little about compliance, and our legal counsel and a mentor of mine, someone I gab at and say, James, what are we going to do about this or that or the other thing? And he goes back and looks it up and says, Tom, I don't know. It's a business decision. James Beebe.
The main thing I've been working on this year is we've got some new compliance policies coming out. And we use the same company that we used last time. And I basically just tried to customize them to us. So look for that pretty soon. I worked on a bunch of things that I probably shouldn't really talk about in front of everybody. But I can generally say I'm back to handling complaints myself, so that took up a lot of time this year. Though relatively not very much. I think we did a math problem earlier, and it's less than 1% compared to volume, so that's pretty good. And I can honestly say no really, really serious complaints this year, so you guys are doing a good job keeping people happy.
Yeah, James, I want to just say, you know, when you do 500 loans a month and you do $1.2 billion a year, you're going to have some complaints. You guys
Yeah.
hear it; it's just impossible not to.
There
But
are
James,
some people you can't.
you can't please everybody. We know that, but just to tell you what we did as a group, we had how many complaints? 30,
About 18.
18 complaints out of 5,400 loans.
Yeah, that's pretty
Do
good.
the arithmetic. That's like 99.7%. Yeah, a 99.7% satisfaction if you
Yeah.
do the. So that's amazing to me.
Yep, and if you
And
want a
that's-
pointer on how to avoid most complaints, just stay in communication with your borrower. That's usually the foundation for most of these complaints. So when you have a borrower where things start not going so well, you know, just make that hard phone call, and that'll usually take care of it. So yeah.
We got our HMDA report in on time this year.
Yep, that's in already.
Yeah, yeah.
Yeah,
Everybody
that
out
looks
there
good.
know what HMDA is? The Home Mortgage Disclosure Act. If you took your Con Ed, you certainly know. You know, it's where the government's monitoring us whether we're discriminating. We got to give all this, you know, racial information and all that. And it's quite a detailed report. But every single loan we have to fill a report out and get it in. And we got it in a month early, right?
We got it in early. I don't know about a month early, but we got it.
That's
in
what they
early.
told me.
And then we're gonna do regression analysis this year again. We didn't do it last year, but you know we did it for like the 3 or 4 years before that, and we've always been looking good on that. So you guys are doing great there as well, and I expect the same results this year.
Great,
So.
great. Okay, thanks, James.
Thank you.
Okay, now this is kind of an interesting one. The states that we're licensed in, we're actually licensed today in 43 states, and that's in the green there. We were licensed where, Jeannie? We were in, or John, we were in Alaska for a while. Okay, that was a 6-hour difference though between Michigan and Alaska. So, because we had a processor move there. Is that how we had to do that? And we had to get licensed there at one time. And I think we've been in Kansas and Missouri before too, and we let those licenses lapse. I don't know.
Missouri, we were in Missouri at one time for the brick district.
Yeah, so we needed brick and mortar there, which we don't have a branch, so we had to give that one up. You got a lot of volunteers for that one, yeah, yeah. Okay, we currently have 80 offices, and we have brick and mortar in 22 states. So these are the states that we actually have brick and mortar in. And some of them are, you know, just one-man operations, and maybe we just have a one office lease.
Can we get a copy of this?
Yeah, yeah, sure, yeah. Michelle, if you'll make some copies of this if anybody wants one. Okay, great. Here's where we did business. And you know, just to give you just a minute, these are the states that we did business in, and how much business we did do. Where's Leith? Leith flies all over the country and says, I need this state and that state.
Yeah, thanks.
Now I got to tell you guys, it costs us on average $4,000 to $5,000, about $4,500 per state. You know, you get into California, but you know we have to do the licensing. Stacy handles all that. We got to do a tax return, and then if you a state return, if you got a local city return, we got to do that. You know, and we got to know the regulations. So it's a big deal to get licensed in states. And Leith is a commercial pilot. So he flies all over the country and says, I need this one. I know people all over creation, but most of the time, if you're in one state, you want the bordering state, so that's why we're in so many different states. We don't go aggressively to get licensed in a state, but when someone asks, we typically do it. This next slide is kind of interesting, that here's the states that we did $20 million more in volume, represents, these 13 states represent 96% of our production last year. Isn't that interesting? So the balance of those states, 30 states, are just kind of onesie-twosie. So I thought that was, so guys, what we want to do is where's my regional managers, we either got to get some aggressive from existing LOs in these states or get some other branches, because we're spending some big bucks, close to 200 grand a year just for licensing. So, and now all of you close loans, and as I had the slide up earlier, Ryan started with us about 8 years ago. He's now head of the closing and disclosure department, and he's going to talk just a little bit about on all the states that he loves to be in, okay, and how it affects his department, but how he and his department now, he's overseeing, what, 18 people?
Yes.
Okay.
Yep. So between compliance and closing, yeah.
Right.
18.
So, and you're going to tell us a little bit about how you're going to help us as salespeople reach
Correct.
our goals.
Yeah.
All right.
So my two main goals for 2020 is basically accuracy and efficiency. So everyone loves compliance, making sure that all the stuff that goes out with the disclosures is there. And that's one of our big struggles, is making sure that we can make sure everything in that file is going out as it should be as quickly as possible. But it has somewhat of a challenge for us when rates dip and you all decide to lock on the same day and want disclosures out the same day. So one of the biggest things for us is going to be, I'm probably most excited about our new Black Knight LOS, because a lot of the compliance of fees and all the things that go into it is actually hardwired into the system. So there's a lot less manual input that goes into it. So we should be able to be much lighter on our feet when changes come around, and be able to say, okay, hey, we had this change. The system will be able to identify that this change is something that requires a COC and a new redisclosure versus a change that doesn't. And then we'll be able to actually see, okay, here are the changes that have to be made and how are we going to actually issue them. My goal is to have potentially you guys able to issue some of your own disclosures, because I can trust that the LOS is going to be able to manage all of the back-end compliance type stuff. So then you can have your conversation with the borrower, make sure your 1003 information is right, send your documents. So that's one of the things I'm excited about the most. I know that Black Knight has a pretty sweet e-close platform that from a closing perspective, I'm excited about as well. So we should be able to start testing that relatively quickly, like before we go live. But what that's going to mean for you guys is if we do get into the e-close arena, which we have a great platform to do that, your borrowers will receive all of their closing documents the morning of the closing and can review all of them and e-sign the vast majority of them, or potentially all of them, and then go to the closing table, sign all of their notary docs, which is a handful, and then should help to eliminate a lot of the, hey, I wasn't sure what this change was, why am I looking at it right now kind of thing, so because they can actually view it prior to and sign it prior to. So helps us a lot on the back end as well for post-close issues where they have to sign everything, as opposed to, hey, we missed the one initial on the page 4 of the mortgage and now we have to go back and get it. So, yeah.
Very good. Thank you.
Thank you.
Okay, so here's our company goal. We figured we could do 15% more. And just a raise of hands, how many people think they're going to do 15% more than they did last year? Okay, is that a fair? I think, okay. How about 20%? Can I get you to 20%? All right, there we go. Good. So that would be 6,200 loans, and we're looking for a 217 average loan balance. I think with the new states we're getting, that average loan balance, like I said, is going to go up a little bit. Now, this is our top-notch bean counter. I spend a lot of time with Justin every day. So does Jeannie, and he's always in the background crunching things and doing things and budgeting. So, Justin, give us a little bit about what's going on in your department and how you're going to help us in 2020.
Yeah, I'll begin with the accounting department. We have two major initiatives in 2020, both revolving around the accounting system. The first one being we're going to implement the daily accrued commissions module. And what that means is that the commissions are going to be starting to accrued on a daily basis when the loan funds. In addition to that, if you're on a volume bonus tier, once you hit that threshold, then that's going to book that in that month as well. Instead of right now, the way it works is that once payroll hits, then it's booking it into the system. So what this will allow is to have you, if you have access to the portal, for more real-time accuracy on your reporting. So that's going to be huge, I think, because I see a lot of people who look at their P&L and they're like, whoa, I got all this profitability, but payroll hasn't hit yet. So this will allow that for more, real-time accuracy. The second initiative is going to be building the branch pro formas into the accounting system. So branch managers and management will be able to pull reports based off of budgeted and actual numbers in the system, and they'll be able to identify the variances much quicker and make those necessary adjustments when they need to. In regards to HR, I just wanted to kind of mention that the employee handbook has been updated, and that'll be going out in the next month or so. So just please review it, and then we ask the employees to acknowledge it every year or two. So if you have any questions, just contact Margarita Hayes or myself, and we'll be able to answer those for you.
Great. Thank you. Okay. So if we do 7.5%, and this is kind of how I talk to the regional managers, we want a 7.5% increase in growth. That equals 408 loans a year over last year, which is only 34 loans a month. So I kind of split it up between our current salespeople and new recruits, okay? So I only got to get 34 loans out of this group for me to hit my goal as a company. If you do what you do plus 30, I think that's a no-brainer. I mean, I honestly, for the whole company, it should be a no-brainer. But, and then 34 for outside, and with our staff, I think that's pretty conservative. So we're going to relook at that, and I think we can almost double that. But anyway, if all of you in this room did just 5 more units a year, we'd hit our goal. So, that extra loan you do every month makes a big difference to us. So I'm really looking forward to this year, and I think our projections. And the regionals all went down and got projections from all of you. And so all we need to do is have you hit your goals, and the company hits theirs. So, and nothing happens until IT happens. Okay, if your internet goes down, if your email goes down, everybody's screaming, and this is the guy at the top of the heap that hears about it, Justin Mead, head of our IT. Tell us how you're going to help us this year, Justin.
Yeah, one of the big things that we wanted to focus on was securing email. Through the tail end of last year into the start of this year, we were averaging probably about 64 attempts a day to compromise email accounts. That includes the emails and then just the password guessing. So that was kind of the driving force behind putting in that multi-factor authentication. Going into this year, we're going to add some additional monitoring so we can stay ahead of that. And we're getting alerts now if someone attempts to crack an account, if someone attempts to set a forwarding rule. So you'll be hearing from my group if we see that kind of activity on your account, just to verify that it is, in fact, you guys setting those rules. On top of that, we added some other stuff for intrusion detection. So if we see login attempts from other countries, we're now getting alerted where we hadn't been before. And, we've seen a dip since we started putting this stuff in to, I think we've about a 60% reduction in the attacks since we started locking this stuff down. So it is working. And we're going to continue to kind of push that into the year. The other big initiative that we're going to start with this year is we're going to replace the corporate phone system at both locations in the hopes of eventually getting a company-wide single platform for the phones. The biggest thing is those that are on the current phone system, you're not going to have to reboot them every day like you're doing now. It's going to be a lot more stable, and again, interconnected, and you can do a lot of things with it, like the phone trees and for individual branches that are on it, and as well as corporate. So those are the two things I kind of wanted to touch on.
Good, good, thank you. Okay, so how do we go about doing it? Now I put my little sales hat on, and you guys know I'm really a salesperson at heart. So how are we going to hit our goals? And Rich, our lending operations manager and new title, is going to really be a big part of this. So Rich, tell us how you're going to help us.
Hey, Tom, thank you. Hi, everybody. Good morning. So I'm going to talk about the underwriting department this morning because the past few months I've been working really closely with Lindsay Coonley. You know, we are preparing for her maternity leave here, which is why she isn't able to be with us today. She was not able to travel. And the underwriting department has a lot of things going on this year. You know, we have a big plan for 2020, and I'm going to talk to you about 3 parts of that. The first part is the structure of the department. You know, it's really important for us to have a stronger structure for the department this year because in 2019 things were a little chaotic. Business was a lot stronger than we anticipated it to be. We had changes in management and everything. So at the end of 2019, Lindsay and I kind of regrouped, took a look back at our struggles and our successes and figured out what do we need to do in 2020. So a large part of that has to do with communication. We're going to be driving communication more towards the underwriters for the loan level issues and questions. You know, if you have questions about a condition, you know, we want you to work directly with the underwriter on those. We want you to work directly with the underwriters on solutions to the more difficult loans because the underwriters know what's going on with the file. You know, Lindsay and I always don't. And in the event that the underwriters can't say yes to something or they need help, we have 2 great team leads that they can escalate those more difficult problems to. And they're both here with us today. We have Kelly Sherwood, the East Coast team lead, and we have Lori Hogum, the West Coast team lead. So please, if Lori and Kelly, if you guys just want to stand up real quick so everybody can see you, we really want you to take the opportunity to meet them this weekend. The next thing we want to focus on in underwriting is specialization. We want underwriters to be experts in the products that they're underwriting because we want them to not have to try to underwrite so many different products so they can become experts in 1 or 2 before they add more to their knowledge base. And with that, we expect that we'll have less mistakes and less unnecessary conditions. So that's something that I think will benefit everybody here. The last initiative that we're working on in underwriting is a new exception-based workflow for a true same-day underwriting for you guys. For anyone that's been with VanDyk for more than 5 years, you can think of it as Fast Track 2.0. And what we're going to do is for loans that meet certain income, asset, and employment validations, we are going to have same-day underwriting for those. So we are going to start with Fannie Mae's Day One Certainty product. And with the success of that workflow, we'll expand into Freddie Mac's version of that product, the AIM, the Asset Income Modeler, and also VA IRRRLs. So with that, we look forward to partnering with you in 2020.
Great. Okay, I think we got it through everybody on the senior management team. And there's one person up there that says, don't put me up there, I don't want to talk 2 minutes, and blah, blah, blah. But I do want to get a little bit of applause for the head of our sales is Laurel Lynn Ball. Laurel Lynn, could you stand up? And a big part of her success is her strong Brian Lovell, who works his butt off every day. Brian, stand up and say hello. I just like this one. If you want to achieve your goals, help others achieve theirs. So when you're talking to your real estate agents, your referral partners, and that's by Zig Ziglar, the late Zig Ziglar. I think that's a good way to go about business. And I don't know how are we going to grow just a little bit? I think it's the products we have, it's the service we have, and the pricing we have. And again, we need to talk about caps, particularly on the larger loans. It's not just the jumbos, but as you get into the $500,000, $600,000, $700,000 loans, I know all the banks, most all of them have caps. And if you can make $3-4 grand on a deal and do an $800,000 loan and get the deal, that's really why the caps are there. It's not to cap your commission or to have you make less money. It's actually there to have you make more money, and all the excess over the cap is given back to the borrower. So if you haven't really took a good look at caps, do it this year, because I think the businesses will be good. Business will be good, and it'll get you more business. This is a little manual we put together. If you don't have a copy of this, the big follow-up, it talks a lot about farming, which farming stands for future applications of referred mortgages. But really it comes down to, if you have a group of 25, 30 agents that are bringing you 3 to 6 deals a year, you're gonna meet, most of us will meet our goals. If you don't have a copy of this, I'd encourage you to get one. It talks about, I said 82% of our business was fixed rate 30, okay? So you don't need to know every product in the world. If you just knew our 30-year fixed and our 15-year fixed, you'd have about 86% of our total volume we did. So you got to know those products, because knowledge creates confidence, confidence will create action, and action will create sales. And I'm not going to talk about sales, but this is my, my baby. So, but Confucius says, by nature, men are nearly alike. By persistence, they become successful. We're all going to have failures. Not every call you make is going to happen, but just be persistent on it and you'll reach your goals. So let's get started, and congratulations, and I hope you have a good flying, guys. Thank you.